So ended up as non-hedge fund people in the hedge fund arena. I didn't really know I wanted to start a company until I had had experiences that led me to think there were signals that made it interesting. One of the best things you can do is join earlier stage companies because implicitly you'll gain exposure to more than just a role. Having a sales background is you can think about being creative on how to convince someone to commit to buying something, even if that thing doesn't exist in the literal form that you're actually going to sell. And I don't
Yeah.
mean lie to people, but I mean being really creative on what is the prototype. I think we ended up talking to a lot of hedge fund people, a lot of hedge fund lawyers, a lot of fund managers, a lot of prospective fund managers, and we learned about the space deeply. Is hopefully you can identify what those actual true motivators are and those triggers for longevity are earlier than it takes most people.
All right, Kevin, thank you so much for joining me on Behind Company Lines today.
Julian, nice to be here.
Of course, man. It's interesting. You followed I was looking to your background and I was following this career path of yours because I came in when I was early in kind of the startup landscape and SaaS as a salesperson and seeing kind of the progression of the typical kind of career growth coming as a BDR, an account executive, a manager, and then ideally lead a whole team, an organization, become a founder. You did that. You had that exact experience going from step by step. And I guess as a founder now leading a company, how important, impactful was learning the sales process from the bottom of the funnel or the top of the funnel, excuse me, all the way to when you need to build a team and actually lead a product yourself. How impactful was that experience for you?
Yeah, I think it's been really helpful. Obviously, it's not essential because when you look at many founders, prototypical founding teams, and some of the most successful companies, a business backgrounded person in the pure sense is definitely the less common. But I do think, especially today, where other than when you're doing like frontier tech like AI or something in hard sciences, a lot of general SaaS has moved to the point where you're no longer building the 10x better thing or the 2x better thing that people like to talk about in podcasts or old business books or in business school. Frankly, a lot of modern SaaS businesses are like, someone already solved the first order revolution problem and someone probably has already done the second order. You're often building something that's 25, 30, 40% better, which is enough to move buyers. And a lot of it is execution on marketing and go to market. And so I would make the following two claims. One, I certainly think it can be a very viable background, more than a lot of people would traditionally think. Obviously, you definitely need a technical co founder in most cases if you are not technical yourself. But the second is, I actually think it's a
Yeah.
background that I would postulate will become more common because it's more important than ever to have a really strong ability to execute on go to market. And that's something that's really hard for people who don't understand it. Sales and business is really one of those conceptually really simple things that is very hard to actually grok in the particulars, right? Why am I losing this deal?
Right.
Why is the marketing not working? How do I go 0 to 1? There are so many talented teams building really impressive tools that fail or give up. And I always
Yeah.
wonder, is that because you weren't building the right thing or did you just not know how to go to 0 to 1? So I think it's been great for
Right.
us in particular, and it has some discrete advantages. And then it has the obvious drawbacks of me not being technical as well.
Yeah, yeah, and thinking about like the switch from having more of, I would say, assassin mindset. Maybe that's too dark of a term, but as like an account executive, where you're really honing in on particular buyers, even from I think up until maybe business development manager, even had a revenue as you were leading in an early startup. When did that transition from okay, I'm going to go get these target accounts and I'm going to cross them off the list and make sure that we can secure those accounts, get those logos to, okay, how do I think about a whole strategy and incorporate other aspects of sales that aren't just my individual contribution and leverage other technologies? When was that transition and how did you, well, I guess, what were the challenging parts of that going from like very narrow minded to now more broad and using more tools and things at your disposal?
I'll say initially it was not intentional, right? When I started my career, it wasn't like, hey, I'm one of those college kids who was a gunner and I'm going to go do this one day and this is the perfect career path that'll get me. Right? So to be clear, I didn't really know I wanted to start a company until I had had experiences that led me to think there were signals that made it interesting. But in short, the way I would answer the question directly is I think that it happened a bit organically in that I kept going earlier. So almost less than the role itself. I think if you are a sales or business or non-technical person listening, one of the best things you can do is join earlier stage companies because implicitly you'll gain exposure to more than just your role. I don't think if you had like a pure sales career, like a large enterprise company, that you would probably end up with a lot of skills and mindsets that would translate well to starting a company, certainly much less. As an example to my background that you articulated, I was a business development manager at Troops 2 companies ago. I started as the founding sales hire, and that just meant I got way more exposure to the rest of the business in a way that I did it at the company I was at before that, which was a company called Mapbox, where I was much more in the traditional, we're at scale, you're a salesperson, you don't get to participate in product thinking, you don't get to participate in strategic decision making. At Troops, because I was early, I got to actually be more of an impact in the rest of the business, right? So I'm the tip of the spear for talking to customers. So that meant that the product team would actually come to me and I would get to contribute to product direction
Mm.
and think about those things. And then you also just literally see them, right? You're sitting across from these people in this small room of 10, 15, 20 people, and you'll osmosis in some of the knowledge. So I think it definitely was a big change. I think every time I switched jobs, I went, oh, like I have so much business context. I really understand what it's like to build a business from this
Yeah.
stage. And then I would go somewhere else and roll and go, oh, shoot, here's all this stuff I had no idea about because it wasn't even in my realm of consideration. So a little bit of an indirect answer, but I would sum it up by saying a lot of it was not just the literal sales roles itself, but being in an early seat. Maybe the other part I would say
Yeah.
more direct is I spent a lot of the flexibility I did have intra any role trying to be involved on the revenue operations side of sales, which you don't have to do as a
Mm.
salesperson. But I think that helps you be more strategic because you really start to dig into processes and understand abstract concepts like how just changing a process can lead to a meaningful business impact. And
Yeah.
that translates very well to thinking about broader business problems as a founder or early stage operator generally.
Yeah. You mentioned a second ago the barrier to entry. Maybe you mentioned it in an interview, and I'm just memorizing or remembering it now. But the barrier to entry with technologies is becoming so much more low that you can have a lot more founders who have less of a technical background to then test out products, build businesses, and actually create really exciting kind of organizations. And how, in your opinion, is that an overall theme because of the advanced technology? And what advances in particular? Oh, these few things have really led to people being able to start up companies more quickly. Obviously, this kind of bleeds into Repool and what you've been able to create. But what advances of technology are allowing people to spin up either businesses or hedge funds, things that had such a high barrier to entry because of other technology, administration costs, all these other more complex necessities?
Yeah, I think there's the obvious technology side, and as a non-technology person in some literal sense, I won't delve too far in there. I think the AI related tooling, obviously, and no code make it easier to spin up tools. But frankly, that's not an area I have any skills. That wasn't part of the 0 to 1 at Repool, even as a relatively new company that went through YC. That wasn't how we did our 0 to 1. But I do think for a lot of people, if that's an area you're willing to invest time, I bet you can get some pretty good dividends. For me, I think it's primarily two factors. One is more of a macro factor, and then the second is something that is interesting. If you have a sales background, you don't have to, but it certainly derives from it. So the first is that I think we, the royal we, just understand how to build businesses better than ever before. So you just can focus on the right things faster if you have been at other fast growing companies through your career. And I think 10, 15 years ago, a lot was just less understood. Companies were just less efficient. They spent more time on the wrong things. It's a bit abstract, but I just think there's a lot of people who have been at companies and been part of the journey. And when they go do their own thing, they're not like
Yeah.
clawing around in the darkness like eras of old. The second that I think is potentially closer to being sales specific, but something that some people can be good at without that background is figuring out how to test your idea, which may or may not involve no code tools or AI. But I think one nice thing about having a sales background is you can think about being creative on how to convince someone to commit to buying something, even if that thing doesn't exist in the literal form that you're actually going to sell. And I don't
Yeah.
mean lie to people, but I mean being really creative on what is the prototype. I think a lot of people are like, okay, I got to
Right.
build the actual MVP platform, but you don't have to. I love this story at Troops. I wasn't there for it. It always stuck with me. So Troops originally was a integration platform company, and basically what they did, because they've been acquired by Salesforce, is integrate your CRM, your system of record, with your communication tool Slack. And this was before Slack was big, so they took a big swing. So kudos to them for that. But more interestingly, the
Yeah.
idea was to test this idea of, is it interesting for founders and businesses to get contextual business information in their communication platform, i.e. Slack? Before they built anything, they just had an intern who would just pretend to be like AI slash
Yeah.
automation. And the whole idea is that you would like type in messages and try and query your database. And this intern, he would just sit there, like look at what people are saying and then just respond. And
Right. Yeah.
that
Yeah.
is, you don't need anything to do that. And that was always such an impactful story for me because it's thinking about how you can test the value. It doesn't scale at all. It's clearly not an actual product, but they went, okay, like this works.
Right.
And we believe from a technical perspective, it's possible to build the totally human outputs
Yeah.
that this person's saying. And that's what they took to VCs, I think. And certainly that's what they built conviction around. And you could do that like tomorrow if you had an idea around some sort of AI messaging tool. Do you know how you do it? You don't go use a no code tool. Just pretend to be the AI. Say, hey, I'm going to organize your data for you via this software. And your pilot customer to prove to yourself and to your co-founders or whatever that this has legs, just totally manually. So I think that type of creative thinking is really valuable. And salespeople will tend to have slightly better skills around, I think, pushing the boundaries of the value props and such, but that's not essential. I think anyone can figure out creative ways to test that early conviction.
Yeah, it's crazy that the timing of this conversation. I was having a conversation with a friend last week about advice another founder gave to me, which was he likes to sell it before he builds it. Not meaning that he's collecting money and then he doesn't have any promise, but it's about a hypothesis. Selling the hypothesis, confirming that people would also want to buy in. And obviously, you're delivering value, but that value can take shape in a different way depending on what those customers want. But you don't know that by trying to build something and then trying to go out and find people to use it or that would think it valuable. It's the complete opposite way. You have to go to the customer first. If that means getting a few people enthused about what you want to build, oftentimes you hear about founders saying that they talk to a customer who wants to be an early buyer of a product and then they start a wait list. It goes based on great hypothesis, an idea of how to execute, and then a lot of feedback and a lot of iteration. But I totally agree with test it now before you spend all this time building and building all these. It's timely technology and investment.
Yeah, and I think maybe as
Yeah.
a final note, that really does relate to the we understand how to build businesses more. I think that there are a lot of smart people and accelerators who really push that ethos. So it may seem obvious once you hear it. YC is an example. This is something they always say, do things that don't scale is one of YC's very famous mantras. And I think everyone hears it and they're like, oh, haha, I get it. But actually doing it well and coming with those creative examples, like what it actually means to do. They don't mean literally just do impractical things for the sake of it. It's really pushing this ethos of figuring out how to validate hypotheses faster. So more people are good about it. There's more content than ever before on examples of how to do it. And as a result, I think more people know how to do it. So to the direct question of why is it easier to start companies than ever, not only is it easier to literally build and there's software automation, AI agents and stuff, but also people are just better at testing if they should even be building the thing that they're going to build, which is really great for entrepreneurship and value creation generally.
You mentioned a moment ago that there were some signals that you didn't really think about becoming a founder, and then you had some experience at a startup and kind of caught maybe a bug or some kind of excitement towards building startup companies. Describe those signals that you saw in your experience and what ultimately led to you being like, okay, I'm going to do probably one of the hardest and craziest things, which is start a company and build it myself and try to find people who want to do it with me. What were those signals and what did that eventual transition look like?
I mean, the first thing I'll say is it definitely is way harder to start a company, I think, for most people than they realize. I mean, I thought I had been tempered by fire by being a very early operator twice at two venture-backed startups. My previous company where I was head of revenue, I was the second employee. But it does end up just being, I think, harder emotionally than you expect, even if you consider yourself a super stable tempered person. And I really underestimated that. And so other than those founders who really find the happy case immediately, it's definitely very tough because there's so much uncertainty. No one's telling you what's right. In fact, probably no one can tell you what's right. So the kind of conviction in the face of total uncertainty is much more daunting than I realized. But anyways, to your direct question, right?
When you were starting
Right.
to
Sorry.
really realize that you wanted to build a company, what were those signals and what was that eventual transition like?
Thanks. Yeah. So for me, it was realizing that I really enjoyed a lot of I thought I enjoyed the uncertainty. As I just said, there was more of it than I was prepared for. But when I looked at what I enjoyed at work, I liked the environments and the times where we were figuring things out because I participated in those. It wasn't like I like watching other people solve them. I liked when we didn't have a sales process and we didn't know what our go to market was. And I got to be not just a participant, but an actual creator and a tester of what those things would be. I liked crafting the processes and seeing my own ideas actually come to fruition. And sometimes they were right, sometimes they're wrong. It's almost a bit egotistical in some sense where you go, I have good ideas, right? A lot of people think that way. Like most people are shit talkers basically in some form or another, whether internally in their monologue or externally. But the magic of that is you never actually have to test. And when you're a founder, early stage operator, you think you have a good idea. Okay. Well, like you're responsible for it. So let's see if it's a good idea. I loved that. I think both, I found that process really fun. I enjoy changing processes, seeing the impact, evolving, seeing them get better more than just the raw execution, which
Yeah.
I think that's true. Then those are characteristics that make you likely to have grit and success as a founder. And then also the other thing you look for is actually, are you good at it, right? Maybe you enjoy it, but you're bad. That's just bad news for you. I thought that I was quite good at those things. And every time I looked at a new role, I said, I want more of that. I want more responsibility because I think I will make good decisions and I enjoy making those decisions and I enjoy owning them. And the earlier you go, the more of that you get to do. And the most of it you could possibly do is as a founder, right? In some sense, being a founder is the ultimate test of, does this person have a good thesis at a both micro and macro level? So that was probably, I think, the big realization for me as a concrete one that I think a lot of people can relate to. When I was at Mapbox, I joined at 150 employees. And when I left, it was a hyper stage or hyper growth stage. And I left at about 400 in under 2 years. And when I look back, I said, wow, I really enjoyed the first part when we were smaller more than the last part. And when you look at why, it's because you're still figuring more things out. You have more autonomy. There's less standardization. There's less monotony. And so I said, go earlier, get more of that. And then did that 3 times in a row until became a founder.
Yeah. And what was the conception behind Repool and wanting to work with hedge funds? It's not something necessarily that people think of that needs to be. I guess we don't really think of hedge funds more than what we see in the news and what we see publicly and outside of people who work within the industry.
Yeah, I think hedge funds are one of those interesting things where everyone knows about hedge funds, but I don't think a lot of people know much at all about any of the details about what they actually do or how they actually work to any useful degree. So, what I'll say about the topic, though, too, how did I, a non hedge fund person, my background is all for people listening, just general go to market SaaS at various venture backed companies. There's no real theme. I'm not like the fintech guy, or I don't have some like specialization from college or a master's in some esoteric topic. I wish I did. But I'm not like a generalist SaaS guy. And it was definitely a case of a founder story of people attacking one problem and then building expertise slowly into a space they didn't understand previously. And basically, in short, we were interested in solving a pretty different problem at first, which was trying to drive more efficient retail trading behavior. And you can see how that might lead to it's like pooling capital together and trading as one pool of capital. And long story short, that from my understanding and a lot of effort and a lot of lawyers and money is basically impossible, which is probably something that a hedge fund person would have known instantly. And basically, we ended up talking to a lot of hedge fund people, a lot of hedge fund lawyers, a lot of fund managers, a lot of prospective fund managers. And we learned about the space deeply, mostly because we're actually trying to solve a slightly different problem. But when we realized we couldn't solve that problem, we went, wait, well, now we know all these things about the hedge fund industry. What can we do here? If anything, we really realized that this was a space that was surprisingly large that a lot of people don't think about, which I think is nice. And the types of problems that the space has are largely that it's a pretty antiquated industry from an infrastructure perspective. So they're very advanced. Hedge fund managers are generally elite, top of the top people leaving firms like Goldman and Millennium, Citadel, Jane Street, etc. But we're not helping them trade better. I'm not here to advance how someone generates returns or alpha. What I'm here to do is kind of the unsexy plumbing that they also don't know how to do, which is all of the infrastructure that enables them, the reporting, the investor communications. And because this is an area where people focus on what drives returns, there hasn't been a lot of innovation on the kind of less sexy back office support stuff. So it's a very antiquated services driven industry with a lot of obvious opportunity for software workflow that would improve the manager experience, allow them to have more time and drive better communications and experience also with their investors, which actually is quite important. And that is actually a much more approachable problem than thinking about hedge funds in the context of being a really crazy, sophisticated trader seeking niche edges in the market and executing esoteric trading strategies with assets I don't understand. It's actually from first principles. Okay, I need to fundraise. What does that sound like? It sounds a lot like and I need to manage my investors
Yeah.
after they come into the fund. Then I like customer success. And I need to share information with them and they need to be able to have a digital experience. That's like surveys or onboarding or investor management. I thought ultimately that the problem set was very approachable, surprisingly, and then a good fit for technology and relatively untapped. So ended up as non-hedge fund people in the hedge fund arena. There was a ton and is still a ton to learn. But maybe as a final note, I think it's actually that we're an interesting example of not necessarily needing to start a company rooted in a deep problem
Yeah.
that we previously understood and still finding, TBD, but a reasonable degree of success.
Yeah. What's fascinating is thinking about a lot of companies are seemingly doing similar things where they're taking an industry that hasn't had a lot of innovation and upgrading it, using other tools and other kind of standard systems, and really just creating a more sophisticated process, which is obviously has this effect of creating this easier adoption or for those who are wanting to build on your platform. And I'm curious on who those people are. Are they current hedge fund managers that want to continue to diversify their portfolios, or are they coming out of a larger organization or larger company like you mentioned and now wanting to kick off on their own? They have some contacts, they want to be the entrepreneur of their space and prove out some of their thesis on how to invest and what to invest in. What's the kind of
Yeah,
profile
I
of
mean,
people
this
we're
isn't like
seeing?
in Canada a democratization play where, one day everyone will have a hedge fund. It's perhaps a little less exciting than that. I mean, we're basically just
Yeah.
targeting existing hedge fund managers or prospective, highly sophisticated traders or asset managers. And the profile of the person as a result is usually someone that has a very deep bench of finance adjacent experience or is literally a trader, right? So someone who's been at a large asset advisory firm or who has been at a hedge fund themselves and wants to go off and start their own thing is probably the most common profile. It's a very sophisticated, highly educated market. It's not some random person in tech with 2 years says, I'm going to go have a hedge fund. That's not really the idea. It's in of who you'd expect. And to be crystal clear, since we haven't actually really talked in detail about what Repool does, we basically build vertical digital hedge fund back office infrastructure. So traditionally, when you launch a hedge fund, it's a lot like any business. Like, let's say you and I wanted to start some sort of podcast software. We need payroll. We need to form the entity. We need a corporate charter. We need accounting. We need to report to our investors, blah, 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 blah.
Mhm.
And now there are great tools for that, right? Stripe Atlas is maybe like a loose analog. A hedge fund at the end of the day is literally just a business of a certain shape. Now, its back office needs are particularly complicated because the reporting is very complex and intensive and it's highly regulated and specialized. But in short, it is still in some just sense the stuff that any business needs to run, just hedge fund addition. So to wrap it back to what we do, there's a lot of these things you need. You need lawyers, you need fund admins, you need KYC and AML, you need investor onboarding and servicing, you need compliance and filings, you need portfolio analytics, you need banking, you need onboarding and offboarding, et cetera. And traditionally, those are all completely separate counterparties. So being a emerging manager, much like being a founder, imagine if we still like rack our own servers like entrepreneurs of old, right? And then we had to like get individual HR software for payroll and then one for insurance, right? Now there are tools for founders. And one of the reasons to build companies, I just go by Rippling and Stripe Atlas and like suddenly I have a company and I can do all of the legally required things. End of story. I never think about it again. That doesn't exist for hedge funds, right? So the novelty and approach for Repool is we essentially
Uh,
provide in a centralized place that tooling. So in short, if I was talking to a hedge fund manager, I'd say something like, we build digital fund administration and other fund back office tools
mm,
like launch, compliance, and banking, as well as investor servicing, all in one place, right? That's essentially what we do.
yeah, and you mentioned it's not something that necessarily stays the same. Is it adapting a lot because of some external pressures, or is it internally wanting to create better technology? What do you mean by it's not necessarily something you can plug in and never think about again? Is it because of
Yeah, I mean,
technology?
it's more that the regulation around the space is changing. So there are some specific sides, right? It could be accounting standards, right? It could be new asset classes like crypto. It could be compliance. Right? As an example, the
Often,
SEC just released 664 pages of what are called the new private fund rules in Q3 of last year. 664 pages of legal docs is a lot of pages and a lot of changes. And Fund managers are not going to stay on top of that themselves. So they outsource it. And that's an opportunity for someone like us to help not only understand what they are, but a lot of what those things are actually require new tools, new workflows that are well suited to software, information disclosure, reporting requirements, etc. And so we abstract away the responsibility of how do I abide with the new side letter rules for investor disclosure? Well, don't worry about it. Repool is going to take care of that for you. And we're gonna make it really easy to do when it does come up. So that's kind of what I mean.
Got it, got it. When you think about the industries that are you seeing, like, new emerging industries being invested in? Is there anything, like, that your customers are particularly doing that's, something that's new and I guess unexpected to the space of, investing in a certain sector or a certain type of fund? Yeah, anything that you didn't expect to come out of it.
I think those are two separate questions, right? Are there things I didn't expect for sure? I think in terms of just like a quick note, I don't know how interesting it is to listeners, but as a quick note, what is changing in terms of asset management trends? I mean, like venture, which is probably something all listeners can map to, right? Like venture at the end of the day is still venture, but what types of companies are great? What types of companies will be great in the future? What the metrics associated with a great company are, those all shift like from a ZERP environment to a post ZERP environment with the advent of AI, right? I think assets are similar. It's very rare like a totally net new asset comes, right? This is 100-year-old industry. It's much older than venture. Crypto is like the only exception. And most people don't just add asset classes opportunistically. It's more that a new group of people who trade crypto rise. It's not like someone like, oh, I'm an equities guy. Like, I'm just going to start doing crypto. Like, it's not like AI company comes out and I'm over here. We're, hedge fund software, but like AI's here. I guess I'm an AI guy now. That's not relevant to the skill set of people who are
Yeah.
already in the space. But where you generate alpha, what strategies are in vogue, definitely change, right? Like right now, as an example, on the alternative asset side, private credit, real estate are quite hot. I think that's just a result of the particular macro environment we're in. Maybe 5, 10 years ago, equity was very popular and it's very cyclical. I think in 5, 10 years, depending on the macro, it's like the industry slowly moves towards where there's the most opportunity to generate uncorrelated and interesting returns. But that's a bit in the weeds, I suspect.
Yeah. I'm curious about, like, the go-to-market strategy in the sense that, like, you mentioned, there's always all these updates of information. So I'm assuming that being a source of information or review or summarizing or being able to implement a lot of the changes that, say, come from regulations is going to be a huge advantage to your company being on top of it for SEO traffic. You can make blogs, you can really, gain a lot of traffic. When you think about, strategies of go to market or even just creating inbound interest or for your overall business, what are the ones that you're implementing now? And do you feel like they're unique to your industry, or the go to market strategies are becoming more general in terms of where to be, where to find your customers, and
I
how to
definitely
get
think
there?
it's very industry specific. I mean, I think there's two buckets. There's what do I do on the 0 to 1? And then there's what do I think will be interesting later. So, what I think will be interesting later are some of the things you mentioned, right? Like, whenever you're in a space where you're primarily attacking old school legacy players, one thing that generally tends to be true is that they're slow moving. They don't have great brands because they do so many things. And they often, if you go old school enough, don't have much of a web presence at all. So there's not like a thought leader, right? There's no like HubSpot of hedge fund
Right.
operations. If you start Googling questions on how to launch or operate a
Right.
hedge fund, you'll probably start running into some weird, esoteric, questionable looking blogs pretty quickly. And so I think that's a huge opportunity, right? Is you can build brand authority and such that has long
Right.
tail impact over time. And it's something we're, as an example, excited to do as we grow. But that's just not helpful for 0 to 1, right? Those are like seeds you plant that pay off in 5, 6, 7 years. I think in any market, you have to have a really strong thesis on what is actually the most effective channel or one or two channels tops for your particular
Mm.
industry and buyer. And I don't actually think that's likely to be the same between most companies. For us, a particular nuance here is that hedge funds and asset managers are extraordinarily conservative with respect to their service providers because there's a lot of if it ain't broke, don't fix it, don't rock the boat. And then they can't afford to mess things up.
Right.
So you can have a shiny looking toy, but if they don't believe that you're going to get the job that is essential 100% of the time, then they don't care about the shiny tool at all. So for us, a lot of the like
Mhm.
typical startup advantages of like really be aggressive on doing a lot of things fast, but do some of them shittily and maybe your customers will forgive you. I think that's a very common mantra, right? go fast and break things. That's not at all good for us, right? That isn't and can't be how we
Got it.
operate. And then from a go to market perspective, I suppose it's a little bit separate from how do we literally acquire interest, but it is relevant to go to market because that informs how we think about communication, that informs how we think about feature development, that informs how we think about messaging, team composition, burn, because those are all parts of your go to market story when you talk to clients.
Yeah.
That's the most high level trivial sense. Yeah, we do advertising and we do cold outbound, but the more subtleties on what does the go to market thesis look like in terms of who you are as a company and what you're putting into the market is pretty unique to the particular space and problem that we're tackling.
Yeah, and you mentioned for the other founders out there working with industries that are a little bit slower to adopt. They have those kind of ideas about changing technology and maybe even just being averse to it. What advice would you give in terms of building trust with your customers and leading them into a direction where I think a lot other founders have maybe a little bit more of an advantage being, and when you sell into tech, any tech company is always quick to try a new product or new tool for the most part. But what advice would you give to founders when they're selling into slower to adopt industries?
I think there's three things in brief. It's to be very honest and transparent. The second, which is free, right? You don't need to be far along or have a lot of capital to do that. The second would be to be very careful about how you build the company in terms of personnel, which is generically true. I think very few people actually do a great job executing there, and we haven't been perfect there either. But is very important when you're in an industry that's credibility driven and people are generally skeptical and or it's slower moving. And then the third piece would be being really careful about what doors you open in terms of what you build because everything you build opens a new door. And if you're in a space that moves very slowly and or requires a very significant investment to get to a viable VP, you want to be very careful not to casually open doors that you don't understand the consequences of. But I think to elaborate briefly on those three, being honest, communicative, I think because it's reputational in software, if you have mislead someone, which I think some companies do, or you're aggressive on your roadmap and it doesn't materialize exactly, there's probably a higher degree of forgiveness here. But in these types of industries, there's very little forgiveness. And you also, I think, command trust by being honest about what you don't do. Basically, you want to let people understand where the bodies are in the closet or what you don't have so that they can make an informed buying decision so that when those things don't happen, you've already told them they won't happen. So there are no surprises. I think that's really important. And then you can be a partner with them to overcome the areas you don't do and strategize with them as to why that's okay or how they can achieve it in other ways. And to the second point, building the company right in terms of personnel, I do think, as an example of a hedge fund space specific nuance, being a startup is not at all a good thing in this space, right? No one who's an asset manager, other than VCs, because this asset classes are surprisingly bifurcated. No one knows what YC is. If you're a venture company selling SaaS to other SaaS companies, you
Yeah.
run around going, "Oh, we're a YC company and we're backed by Sequoia or whatever." And you just get credibility that is frankly probably unwarranted. And that's great. That's part of the magic of going
Yeah.
from 0 to 1 for many spaces and companies. No one cares and they don't even know what those things are, which maybe is insane to founders who think about and romanticize about having those VCs involved. I promise you, if I tell a
Yeah.
client we're a YC company, 19 out of 20 of them are going to go, "What is that? And why should I care?" And so you have to be very careful back to the building the company, right? Like we have had to make certain hiring decisions that probably don't pattern match well to other general startups in terms of hiring from industry. Because I don't want people to like, who's this 30-year-old, hopefully smart, but like random startup guy. I have hired very
Right.
quickly people who come from the street, Wall Street, that is, or from other fund admins to shore up our credibility and help legitimize our operational expertise much faster than you would make those types of hires in other industries. Again, it's working so far. We'll see if that was right, but that's definitely not something that we did at previous startups. We weren't like, we got to hire this exec from Salesforce right now. In fact, there's a lot in Silicon Valley
Yeah.
traditionally where you go, don't hire those people. So that was a bit of a
Yeah.
uncommon decision we made. I do think can be very helpful in these situations. The last note, which is like being careful about what doors you open. I think it's very common at startups to build a feature and then abandon it and kind of testing and experimenting. And I'll give an example. At my last company, we built like a surveying tool. We weren't like a surveying company. It was just irrelevant to what we were doing. And so many people demanded it. And the price we paid is like if you give a mouse a cookie, it was actually worse now that we built this tool because everyone demanded like the V2 and the V3 and the V10 of that tool, and we weren't going to build those things. So we would have been better off never opening that door in the first place. And I think that type of accidentally open the door and then people see this like incomplete thing and they think about that a lot is particularly relevant in a space like this where people demand operational excellence in the things you have built. And so if you build something, you
Yeah.
better be prepared to entirely take it away if it's not correct and you're not going to invest more into it. But you can't just leave a half-baked product out in the wild in a space that's mature like this.
Yeah. I know we're coming to a close here, so I want to get to my rapid fire questions and real quick before we end the call. First question I always like to ask founders is what's the hardest part about your job day to day?
I think for me, it's honestly just time management. You have to context switch so much. I don't think that's a particularly profound comment. I think it's a common sentiment. And you often can't get all the things done that you want to get done, which is pretty obvious. And so being very good about focusing on the most important things is a skill that is particularly important here that I would have historically said I was really good at. But at Repool, I think I'm like chronically quite bad at, which I'm not sure how bad I should feel about, but I'm trying to get better at. And then the other is to really try and find augmentations to that. So things that I would have never considered before, like knowledge management systems, certain organizational and to do tools, maybe even
Mm.
offshore executive assistant augmentation to help supplement my workflow are things that I am actively working on or exploring or already using here at Repool just because it's so hard to do all the things that I want to do. And that I think I definitely underestimated coming into the role because there's just so much stuff that I have to do that I hadn't even considered as things that existed to be done in the first place.
Yeah. Yeah. What would you be doing if you weren't working on Reaper?
No, honestly, for me, I would probably look at joining like an AI company personally. I mean, I get excited about new technology. I'm almost a little remiss that I'm working on Repool lightly in the sense that whether or not it's as big as some people say, I do think AI represents this obvious new frontier of technology. And basically, why it's exciting to me is less because I have some view on what it's going to mean for humanity or something. It's just clearly going to have a lot of opportunity. There's going to be totally new, cool tools that get built. There's going to be a lot of greenfield space to build new and interesting businesses. Like if you knew how big tech was going to be as a sector and it was 2010, would you want to go into tech? I mean, yeah, honestly, in some sense, it's almost like easier. Like people always talk about how all the easy problems are solved. Whether or not we think that's true, I think I agree with some part of that sentiment. And AI is like a fresh slate. There's going to be all sorts of AI companies that come out in the next 3 to 5 years. I think in that second mover wave, that 10 years from now, people are like, oh, that was such an obvious AI company. And so if you want to be in a position to potentially be part of a company that undergoes that journey where they become a household name, or you yourself want to be a founder, I almost think being part of the first wave and learning about the space is great because actually, if prior technological waves are any indication, very few of these first wave players will actually win. It's actually the people who start companies in 3 to 5 years, once the industry matures, that are going to build the bulk
Yeah.
of the value that's generated in this space. And so, if I didn't know any better and I didn't have a pre existing attachment to some space or company, I would just go become a sponge about the AI industry. And this is assuming I wanted to be a founder and hopefully have come up with some set of interesting ideas that I'd be able to take on in 3 or 4 years and make other interesting industry connections to talented technical folks who could become my co-founder, when that opportunity arises and I'm ready to take the leap.
Yeah. I always love you mentioned the fresh layer. I always love the ideas that necessarily weren't possible before have being more of a possibility because of, an upgrade in AI technology, being able to, handle some maybe data set and maybe make these particular assumptions or help with a particular function, maybe shorten the time a business does a certain task so they can actually operate effectively. There's so many ways I think I get really excited about what the new technologies enable. Same with crypto and Web3 and how those will impact other industries. Like, what were those ideas that maybe were too early to start that we'll start seeing come about is the exciting part I like. Yeah. And in regards to when you do research outside of Repool, for those, really, this is just a selfish question. What books would you recommend other founders, whether it's fiction, nonfiction, take you away or put you right into exactly what you need to do on a day-to-day basis? What stuck around with you and lasted the test of time? What are some book
Yeah, I'm
recommendations that you
kind of
have?
smiling if this video for those who can't see because I'm not a books guy. when it comes to business at all. Maybe that's heretical to say or not optimal for my image, but I like books primarily. I definitely like books, but I like reading for my own personal enjoyment, and I like reading a lot of science fiction, which I do think is good for me.
Yeah.
I'm just not leveling up through books personally. So, 2 follow-ups. I would say, though, I have read a lot of business books, not necessarily of my own volition. I do think for non-sales backgrounded folks, in light of some of the things we said earlier in the conversation, reading some of the classic books on go-to-market probably are super interesting and useful for engineers. In fact, I think it's
Yeah.
asymmetric helpful. Like I can't just go read some 500-page book on, React and suddenly have any utility as an engineer, right? Like it that
Right.
no, not at all. But an engineer can totally go read some sales books and walk away with like crystal clear, actionable, implementable insights that if they're building their own company and they're on the front lines with customers, they can use that will level them up. Just getting some foundation on how to approach and structure a sales conversation, some theory of value, some sales framework. That could be the challenger sale, that could be Sandler sales, anything like that. There's a bunch of these like classic sales books that are quite still in vogue with actual sales professionals that I would encourage people to read. In terms of how I level up, if that's how I was going to interpret the question, I like watching YouTube videos to stay on top of trends. And I also like podcasts quite a bit. So I am a classic tech person that I listen to a wide variety of these tech podcasts, some of which are quite popular and some of which are quite
Yeah.
niche. And I do definitely recommend that. Maybe my last is I also read some news sites. I love like Matt Levine as an example on Bloomberg. I think is an incredible way to rapidly learn really esoteric but interesting financial concepts in an entertaining, digestible fashion. He's one of the top writers on Wall Street. And I do the classics. I cycle through like TechCrunch and the Information and Semaphore and Axios and The
Yeah.
Verge here and there, not too much because I think that's a lot of time, but to just stay appraised as to what's happening in the industry.
Yeah. What are some of the podcasts that, from a CEO standpoint, that really are helpful, whether it's from a strategic standpoint or just understanding your industry that
Yeah,
you?
I listened to quite a few. BG2 is a very recent one with Bill Gurley, and that's and Brad Gerstner, that's quite popular. Anyone who listens to the All In has probably seen those folks around. I do some of All In. I think that's a pretty common one for people who are listening. Those are like the most well known that I would say I listen to. On the AI side, there's a podcast called No Priors that I quite like from Elad Gil and Sarah Guo, who run a boutique VC firm. I think she was at like Greylock or something like that before that. And then there's a bunch like the more typical business ones, right? What is it called? Like How I Built This or whatever. A lot of the other podcasts, I'm more selective depending on the title of the episode. The 20 VC does an interesting podcast. I think that's Harry Stebbings.
Yeah.
Like some of the Bloomberg ones, some of whatever, who's that guy like interviews a ton of people at Lex Friedberg or whatever, Friedman. Again, it
Yeah.
depends on the
Like Friedman.
topic for me. I'm not a blindly consume every episode because I just frankly don't care and I have limited time. So I'm selective about what I listen to. But basically, if I look at a podcast and the title seems interesting, I'll open it, I'll look at the agenda. And if particular topics are interesting, I'll consume those on my commute to and
Yeah.
from work. And that's my most regular form of consumption.
Yeah. I like the new wave of social content. I feel like even though there's a lot of clips and stuff that are kind of clickbaity, I'm super into it because they get me directly to a topic I'm probably wasn't really thinking about investigating, but and then I find out something interesting or explorative that or fall into a rabbit hole of some other subject. So I like that. And especially with YouTube and all these other resources out there. We try to do a pretty good job, and I think we do. But Kevin, last little bit before we come to a close, where can we find you? Where can we support you? Where can we be a fan of what you're doing? Obviously, we will find you on Repool, but LinkedIn's, any other social platform that you frequent, where can we
Sure. I
be a
mean,
fan
it's
of you?
just LinkedIn, and I'm not honestly a particularly active person. I think there's a lot of pressure these days to build a brand or something, but I don't really think that's particularly necessary. I think that's just noise for most people. Like, build a brand if it's helpful for you to build a brand, what I'd say. And I don't think it's helpful for me to build a brand in the
Yeah.
space I'm in. And I don't think there's much of a brand to be built around a 30-year-old founder of a hedge fund infrastructure company for hedge fund managers, in the sense that I don't think hedge fund managers will be compelled by that. So I focus my time where I think is higher leverage. So I guess on the off chance you ever run into a prospective hedge fund emerging manager with a serious background that wants to launch or has launched and is looking for service providers or just wants to level up their back office and LP servicing, whether they be a hedge fund or a private equity fund or venture fund. Repool has tools of different kinds that can enable better software driven experiences. And at the least, we'd love to talk to those people and hear how they think about the world. I suspect that's a relatively niche ask, but there it is.
Find them. Yeah, we'll find them with all the content we spread. I'm sure they'll fall into our algorithm at some point. Last question I always like to ask is there anything I didn't ask you that I should have? Any last point that you want to touch on? Any last little subject? Anything you're interested in sharing that maybe isn't Repool related, but is part of your heart or passionate
Maybe
about?
just one comment because we're 3 years in. I've invested in other startups. My batchmates from YC are quite far along. Some of those companies are failing or dying or have split up, and obviously some are really successful and everything in between. But I think the number one thing I'd say to prospective founders, and a question I wish I had contemplated harder and more seriously, both for yourself and a prospective co-founder, is like to really think about the non-best case scenario for the company and evaluate how you will feel and your longevity and whether you'll still want to work on an idea in those cases. It's obvious in some sense hearing it, but I really do think most founders don't contemplate hard enough. Is this actually a 10-year journey for you? Perhaps longer? Because we're so enamored with like the XYZ company rockets to 100 million ARR in 2 years and now they're a unicorn. Realize that if you get to just a million in ARR, as a venture backed company, you're probably already outperforming 50% of companies that raise a seed round of funding from
Yeah,
VCs, which is already a small bucket of total aspiring founders. And my point is that like most companies will end up in a success case that is not the glamorous we see in TechCrunch for the information. And the journey is probably much harder than what you think it will be. So just really understanding what your motivations are and what will cause you to have longevity. I really believe that persistence trumps talent and grit trumps intelligence past a reasonable bar. I think Jensen Huang at NVIDIA was just talking about a similar theme very recently when he talked about how Stanford graduates should
yeah.
experience suffering in order to foster grit and longevity. And I think some people are memeing about it because it's like a bit of a ridiculous sounding sound clip, but it really resonates with me now. A lot of the people I see
Yeah.
bailing on the journey, it's because they only were prepared to really continue in their company if it was a 99th percentile outcome. And now they're just like a 75th percentile company. And they thought about that. They didn't really think about that. Or they
Valid.
really are motivated by things they're passionate about and they accidentally ended up building something they weren't passionate about. And so these are all so obvious sounding, but every time I see a company retro or I talk to a founder, like it just takes you time when you're actually the one experiencing it to arrive at some of these seemingly external obvious conclusions. Similar to like when you want relationship advice, it seems really complicated for you, but it's so easy to opine about other people's situations, right? Like when you're in it, everything is muddier, harder. There's way more factors, way more context. But as like a simple example, right? I think a lot of people really only can persevere if they're building a company they're really passionate about in some personal or societal way, but they will often end up accidentally not being able to do that. And then they'll convince themselves they can stick with it for a while, but inevitably the wheels will fall off. And the lesson and takeaway in me saying this is hopefully you can identify what those actual true motivators are and those triggers for longevity are earlier than it takes most people. It shouldn't be, the wheels fall off 3 years in. Maybe the wheels fall off a year in. That's great. That's 2 years you get back that you can go do something that you care about more. Or you honestly don't delude yourself in the first place into opening the can of worms and you make a different pivot earlier, or you make a different decision earlier. I think about that a lot. There are shades of that in Repool, even though we're marching on, that fortunately for me have happened to be okay. But frankly, I wasn't thinking about because as I said at the very beginning, I didn't set out to create a hedge fund company. And I think in candor, the original idea we wanted to solve was a lot more personally interesting. But I am personally much more motivated by a lot of the intellectual satisfaction, the actual act of building, the growth, stuff like that. So I have longevity, but I look around me and a lot of people don't. And that's a shame, not just for your own time and career, but also because if you did still want to be a founder, you could just build something else that hopefully becomes big and valuable to the world. And
Yeah.
you're just not doing that thing. So that was quite long winded. And I think there is a lot of content out there that says similar stuff, but because it's one of those things where it's so rarely actually internalized in a useful way, I will add to the stack of people saying something like that and really encourage listeners to deeply ask themselves those questions.
Kevin, thank you so much, man, for adding to the stack of people really just realizing the truth about building companies, asking the questions. It is fun and exciting in a lot of different ways, but it is the reality of taking a lot of responsibility, especially when you start having customers and delivering on that. It complicates things more and more as you go down the line. So reflecting on the reality of it is imperative to to not only staying sane as a founder, but realizing, are you operating the business also at the right capacity, or are you being effective? A lot of that introspection is needed, and I think it's always a good reminder for founders to hear it. But Kevin, amazing to have you on the show. Thank you so much for joining Behind Company Lines
Julian,
today.
thanks for
Of
having me.
course.